Hi everyone and welcome to today's morning report on Thursday the 30th of April with me, Rich Perry, market analyst at Handtech Markets. The financial markets have been incredibly volatile in the last 24 hours. The big mover came with the GDP data from the States yesterday. Big disappointment on the downside, and the dollar got massively sold off. Euro on a big rally. That in turn had a big impact on the DAX because the DAX is such a big exporting weight in that. The DAX sold off sharply, huge decline there on the DAX, and that euro rally has sort of continued today. It sort of seems as though it's a bit of possible short covering perhaps, as the big long-term positions perhaps are unwound to a certain extent. Another 100 points up on the euro today, and subsequently the DAX is again much weaker, down 70-80 points again on the DAX. So big moves on these markets. And let me just show you how this dollar index has been impacted by this. We are now, as we speak, back at the big long-term uptrend on this dollar index. It is incredible. This big sharp correction that we've had on this dollar index over the past few days is now back at that long-term uptrend. So that's now being tested. So there are real question marks now being asked of this dollar bull run that we've seen, and certainly this euro rally today is not helping it whatsoever either. In terms of movements on Wall Street, well, it was quite sharply off yesterday after the GDP data. A slight rally on the back of the FOMC meeting. The statement suggested sort of that it pretty much left the door open. Really, nothing too significant in terms of changes to the statement. It took out a little bit of took out a little bit of time, sort of months ahead that it was forecasting potentials, and it sort of left the door fairly widely open because it talked about the recent deterioration in the some of the indicators. It talked about them being transitory, which suggested that they were temporary and perhaps there were going to be improvements in coming months. So the Fed remains data dependent, as we pretty much thought it would. And as soon as that data starts to improve, if it does start to improve in the coming months, then the market will start to factor in the potential for a rate hike again. It sort of leaves the door again still open for September, probably more than likely October now, maybe even December rate hike. But it just looks like June is, I mean, it's not out of the question by any means at all, but it is increasingly unlikely for that. So that was the Fed. And what we've also seen is sharp volatility across, again, the forex markets in terms of the dollar yen and also the Kiwi. Both of those central banks, also the BOJ and the RBNZ, both gave monetary policy. Both stood pretty much as they were. Overnight at 10 o'clock last night UK time, the RBNZ came out with monetary policy saying that they wouldn't cut, they wouldn't be, they stood flat on rates, but the governor talked about the potential for a rate cut if inflation continued to disappoint. And then today also the BOJ came and stood pat on its 80 trillion yen worth of monetary easing and quantitative easing, but also interestingly cut its forecast for inflation for 2015 to 0.8% from 1%, and also GDP to 2% from 2.1%. So that slight cutting of expectations there, or forecasts, has slightly given the dollar a boost today. So I'll talk about all these things in the charts in a bit, but certainly lots going on in markets. What we've got out today is we've had, just in the last few minutes really, we've had the German employment, which showed employment improving and unemployment staying fairly steady, but still decent numbers there from the German employment data. Spanish GDP also increased more than expected, to 0.9% from 0.7% last time out. So that was deemed to be a positive for the euro. So these are all helping the euro higher today. In a few minutes, we've got the Eurozone inflation data. Flash inflation forecast to come in at flat, actually, so that would be a third month in a row of an improvement on that inflation data, as you can see here on the chart. Then at 1:30 we've got the States coming out with their weekly jobless claims, and also the core personal consumption expenditure. Core personal consumption expenditure is something that the Fed is looking at. It's forecast to come in at 0.2% for the month, which would be around flat on 1.4% for the year. So no real uptick on that yet. In terms of weekly jobless claims, broadly flat at 290 is the expectation there. So much going on at the moment, and the big, as I said, the big move has been on the DAX, and that's my chart of the day. And that move on the DAX has now completed a big head and shoulders top pattern. I've been talking about this for about a week or so, and it completed yesterday with this huge bearish candle. Further euro strength today has dragged the DAX lower again. And that top pattern gives us an implied target of 10,850. But it's interesting that I'm still looking at these Fibonacci levels as being quite an interesting point of consolidation, really. So 10,950 is the 100% Fibonacci projection of. If I zoom out, I'll show you where I get these projections from. Of this move here, and I've been talking about these projections for a while, actually. Had big consolidation around that 61.8%, and now we've completed that top pattern. It sort of looks like the DAX is coming back towards this 100% level once again, which again, that had a fairly sizable bit of consolidation around that in February before breaking out, so it could easily come back towards that now, and certainly today's weakness continues that. The momentum indicators confirm the move, all looking corrective now on the daily chart. The hourly chart also pretty weak in terms of momentum. You can see here the neckline of the top pattern. Theoretically, there could be a pullback rally, and that obviously that neckline comes in around 11,620 now, and you'd say anything around 11,620 up towards 11,680, 11,675 sort of would be your immediate resistance for a pullback rally. But it certainly looks at the moment like we're sort of fairly weak still. The hourly RSI is looking a bit stretched. It did go back down to 11 actually on the 17th of April. So it's still a little bit, you could argue, a little bit of room, but certainly the momentum is pretty weak in terms of to the downside, but it is a little bit stretched. So you could see a bit of a pullback rally, possibly, and then I think if you saw any sort of sell signal again after that rally, I'd be looking at it as a chance to use that as a short position, because it certainly looks like this is a big top pattern that's significantly changed the outlook on this DAX chart. Wow, so much going on today. So I wish you good luck in your trading, and I'll speak to you later. Thank you.